Have you been wondering what these crazy news headlines about interest rate hikes and housing inventory mean for your home purchase plans? Hi, I'm Stan Hartzheim with Double H Home Loans, and today I'm joined by my really good friend Brett Janzen with RE/MAX Capital Properties. You know, lately Brett and I have been getting a lot of questions about the state of the housing market in general, the mortgage market, things like that. So we thought, why not jump in here and try to give you a little bit of clarity on both of those subjects. So Brett, what are some of those main questions, or one of the top ones that you've been getting lately?
Well, one of the main ones I've been getting lately is people are seeing in the news that the Fed has been raising the interest rate. And they're asking, what is that doing to mortgage rates, and why are they doing this?
That's a really good question, Brett. You know, the Fed actually did raise rates 0.75% recently, and a lot of people feel like that made the mortgage rates go up, but it's actually the opposite. When the Fed raises rates, it's because they're fighting inflation, and that inflation rate right now is at an all-time 41-year high. And so as they raise those interest rates, oddly enough, it causes inflation to come down, and as inflation comes down, so do mortgage rates.
Okay.
So Brett, if the Fed is actually successful at cooling those inflation rates, we should start to see mortgage rates come down, maybe even as soon as the end of the year. That'll be a really good opportunity for people.
Okay, well that's great news.
So one of the questions that I get a lot is, what is the inflation rate and these mortgage rates doing to property values?
Well, that's a great question, and it's a little bit complicated because there's more that we have to consider than just inflation and interest rates. And one of the main factors is supply and demand. It's one of the cornerstones of capitalism, and it's one of the strongest forces in the market today. And we've seen rates go up at a really high rate the last couple of years, but we're also seeing millennials for the first time are starting to buy houses in large numbers, which only makes the supply issue worse. And we currently have a low inventory both nationwide and here in Cheyenne. And with the supply or demand going up, we're most likely not going to see the supply issue get better anytime in the next couple of years. All right, so Stan, we've talked about inflation rates, supply and demand, and one of the other big things my clients are worried about is recession. Do you have any thoughts on recession and how that could affect things in the future?
You know, Brett, I do, and you're probably not going to love the answer I give you, but the reality is a lot of forecasters think we're already in a recession. You know, the markets define a recession as 2 quarters or 2 consecutive quarters with negative GDP. And in our first quarter this year, it was already negative, 1.6. And they came out with a forecast that they think the second quarter is going to be negative 2.1.
Oh, wow.
So we're probably already there. They won't say it until a little bit later. But the good news is, I don't want to downplay it because I know during a recession, people lose jobs and incomes go down and stuff. Mm-hmm. But this one should be a little more minimal than, we're not talking about the Great Recession of 2008. Okay. And one of the statistics that we see consistently for over 100 years now is that every recession has resulted in lower interest rates and higher home prices. So recession is not a terrible time to buy a house if you can qualify.
Okay.
Even when we consider that time frame of that 2009, 2010, the Great Recession, which again, we don't think we're headed there.
Yeah.
People did lose some value in their property, but usually they lost enough that, by 2012, they were back to a break-even point.
Okay.
And the reality is from 2012 to now, we've had historical appreciation rates. People have made a tremendous amount of money in their homes.
It has been pretty amazing.
Yeah, right?
Yeah. So Stan, I guess the follow-up question to that would be, is it better to go ahead and buy a house now, or would it be better to wait for the interest rates to go down and the volatility to settle a little bit?
That's probably the number one question that I get every day. Should I wait till the rates are lower? Should I wait for this? Should I wait for that? And my answer is pretty much always the same. A person should buy a house as soon as they can qualify to buy a house. Because if you're not a homeowner, you're a renter and you're paying somebody else's mortgage. And when you give up on that appreciation rate that we just talked about, historical appreciation, it's so detrimental to a person's financial well-being. I think there's some statistics out there that would say renter's net worth versus a homeowner's net worth is about a discrepancy of 40 times. So wow. I think it's $8,000 versus 400,000 or some crazy number like that. So
That's quite the discrepancy.
right. So
Okay.
even if the interest rate is a little bit high, the reality is that interest rate is temporary. We're going to go ahead and refinance you and get that rate down as soon as possible, but the appreciation and wealth building is permanent. You're going to have that forever.
So now how does just owning your home help increase your net worth?
Well, as the loan on your home is being paid down, which you're going to be rent anyway with no pay down, right? And rents have been going up 6% per year every year. So your rent's going up. Your fixed rate mortgage is never going to go up. In fact, it's going to pay down your loan, but your property value is going to go up. And so as
Okay.
that goes up and your loan goes down, the difference in there is your home equity.
So you get both the appreciation and the amount you're paying down on your loan instead of just paying it to rent.
That's right.
Okay.
The amortization gain, and it's a really powerful tool.
Great.
Well, there you have it, folks. The long and the short of it is that nobody has a crystal ball, and we can't say for certain what the future holds, but we do know that there's many indicators from our past that give us some pretty good idea on where we're heading in the future. If you have the right team of professionals in your corner, it gets a little easier to make educated decisions. So go ahead and hit us up by email or phone. Ask as many questions as you need to feel confident and comfortable in your decision-making process. We're really here to help you.
Well, Stan, thanks again for coming today. And if anyone has any questions, feel free to give us a call or email anytime. Stan and I are both licensed, both in Wyoming and Colorado, so we can help you either side of the state line. Anything you need help with, give us a call, even if it's just questions about where the market's headed or what you think you should do.